When we look at the last years, Adobe's chart shows a strong uptrend, with higher highs and higher lows forming over the past few months. The price recently bounced off a key support level, suggesting that buyers are stepping in to defend that zone. The 50-day moving average crossed above the 200-day moving average, a bullish golden cross signal. Momentum indicators like the RSI are rising, showing renewed buying strength without yet being overbought. If the stock can break above its recent resistance level, it could trigger a continuation of the bullish trend toward new highs. As we can see, we formed a triangle setup in which we formed a triple bottom as well as a falling wedge. So now with these bullish indicators showing us a buying signal, your question might be, when should buy into the market? The answer is simple. First, we need to trade above the blue triangle trend line and also need to trade above the EMA line, as well as the liquidity bar, which is the case, so now would be a great entry to buy the stock. Adobe stock has recently been consolidating after a strong correction, creating a low volume area on the chart that could act as a liquidity gap. If buyers return, especially after positive earnings or new AI product news. The thin volume zone could allow the price to rise rapidly with little resistance. Adobe's fundamentals remain strong: high recurring revenue, strong margins, and leadership in creative software, which can attract long-term investors once momentum resumes. The company's aggressive push into generative AI, like Firefly and AI-enhanced Photoshop, adds a compelling growth narrative that could reignite demand. Institutional investors often pile in when liquidity is low and sentiment turns positive, amplifying price moves through those gaps. Many traders view Adobe's current valuation as attractive compared to historical levels, making a breakout through a low liquidity zone even more likely. If the stock clears that liquidity gap decisively, technical buyers and short covering could combine to drive a sustained rally toward the next major resistance level. The monthly oscillator stands at buy. The financials are positive, and even the analysts' price predictions are bullish, and the fact that Donald Trump will cut the interest rates dramatically will drive the price even more to the moon, especially for this AI leading company which has a monopoly in this sector. The important factor will be the moment when the whales will sell their short positions. When large investors finish selling, the heavy supply that was capping prices disappears, allowing the stock to rebound quickly. Their exit can create a liquidity vacuum, where even modest buying pressure pushes prices higher. New investors often step in once they see the selling pressure ease, interpreting it as a sign of stabilization. If Adobe's fundamentals and AI growth story remain strong, confidence returns rapidly after the whales are out. This shift from heavy distribution to renewed demand can ignite a sharp relief rally as the stock breaks through resistance. For example, money could rotate out of the magnificent 7 into undervalued AI stocks like Adobe. My price target is a 47% upside from the current price in 1 year.